Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, October 21st. It's currently 2:45 in the afternoon. The outlook for tonight probably legitimately mixed. Not a lot here to influence the trade. Um, Weather, we always look to that for Sunday night to see if there's any information there that might lean markets in a particular direction. We still have some dryness issues in the U.S. plains, especially in the northwestern part of the U.S. plains. Might be some people talking a little bit about that. You've got um, South America. People are trying to elevate the importance of South American weather here. It's a daily talking point, but if you've tried to trade South American weather on a day-to-day basis and try to attach it to weather or to price action, you're probably been disappointed on several occasions. It's probably a little drier than they'd like it to be in northern Brazil, but the reality is that based on the time on the calendar and the overall weather patterns here, I don't think there's really a storyline there. We know the South American growing season is going to be important. We know that it holds potential to significantly impact markets and to quickly elevate concerns and volatility, but we don't have a storyline there at the present time. It's dry in parts of Western Australia. Certainly a legitimate concern. Marketplace has tried to make an issue of that several times over the last several weeks, but here again, I don't think that's had any consistent connection to price action in terms of influence on a day-to-day basis. In reality, I don't think there's any storyline here that's having any day-to-day consistent influence on price action. We're approaching the time of the year the investor interest backs off some. They're preparing for the end of the year. I think price action in many ways has disappointed traders over the last couple of months. People have been bullish corn and beans for, in near universal fashion for a long time. Corn broke almost $1.50 off of its late summer peak. Beans broke over $3 off its late summer peak. And I think both of those occurred with virtually nobody expecting it and nobody embracing it once it began. So there's a lot of reasons that's been disappointment around the trade. Last week's price action was choppy, trading weaker early, finding strength later in the week. Friday's price action didn't perform well in relationship to the firm overnight trade and a weak close. I think part of that has to do with the outside markets, part of it has to do with weak technical conditions overall, and there's just nobody here to sponsor a grain trade position at the present time. I think that's going to change in the weeks ahead, and I think there will be an impressive wintertime, early spring type of upward trend in grain prices. But first we have to get a bottom. First we have to find from what level we're going to start at. In the case of the corn, an argument can be made that we've probably already made the seasonal lows. I would accept that idea as being legitimate, but we are currently about 50 cents away from those longer-term support levels. That leaves a lot of room for the next few weeks where the market could absorb some sort of disappointment, trading range type environment. And right now with Friday, we were up testing the levels of the highest levels in about the last month, and I think we could easily over the next couple of weeks go down and revisit the bottom side of those parameters in corn. I think overall you're looking at a sideways pattern here. In the case of wheat, there are reasons to be bullish wheat. There are reasons not to be so bearish wheat. We're working through larger global supplies. We're looking ahead towards a period of some tightening of global supplies. We've got problems in Western Australia that are of concern. We might have some concerns in the U.S. hardware winter wheat area, but I don't think significant concerns are there. On the other side of the coin, you have very large acreage expected for U.S. soft red winter wheat. A lot of embrace for planting wheat this fall in the eastern Midwest. So I think that's going to weigh on things. You've also got a situation in the beans where you've got plenty of global supply. You've also got a situation where if South America has a normal season with the acreage expansion they're expected, you really don't have a supply problem for soybeans. Looking ahead towards 2013, the trade's going to expect large acreage increase for U.S. soybean acreage. a large enough acreage base for corn that a normal growing season could quickly take away supply concerns there. And so on some respects, you got people looking forward and seeing the potential for significantly lower prices than we experienced this past year. And I think that's a legitimate and reasonable storyline and expectation, and something producers need to be worried about. But in the meantime, we still have to work through a tight supply situation for corn. We know we've seen clearer signs that demand rationing is underway, but we probably still have potential for a decent wintertime rally phase. It's just a question of when it's going to get started. And I think there are technical concerns that warn that wheat and beans may not have yet made their seasonal lows. That can act as an anchor on corn. So we have about 2 or 3 weeks in front of us, maybe a month or so, where markets can act poorly and before they create a bottom that we're ready to build upon and create some new uptrend. I think it's important to point out a few things too about the outside markets. People have not been trying to attach those to a grain trade on a day-to-day basis, and I understand that. But we have some macro issues dealing with. First of all, the U.S. fiscal cliff issue is just ahead of us, and as soon as this election is over, there's going to be an immediate focus to the fiscal cliff and how the Congress is going to deal with it. Which president, who's going to win the presidential election, could have some influence on how that is handled, without a doubt. But soon that's going to become the #1 issue that the political world is talking about. I think it's an important world for focus for the investment world as well. The global large investor is also interested in what the next 4 years are going to look like. Are we going to have a increase in government spending? Or are we going to have a dramatic reduction in government spending? What are the implications? Things of this nature. But the Dow finished lower Friday and is very near to the lowest settlement price we've seen since early September. I think that market, as I've warned about here for a couple of weeks, was poised for a major top. I think the downside risk in the stock market over the next 6 months, say, is much more than the trade generally wants to believe. You might see some recovery attempts there early this week, but I think you've got investor sentiment willing to sell short-term bounces in the stock index. Gold closed lower Friday. That's the lowest settlement that it's been at since September 6th. That's a sign of something different in the investment community. Crude oil has been in a downtrend actually for quite some time, even though it doesn't necessarily feel like it at the gas pump. And I think after several weeks here of some sideways trade, the crude oil is poised for its next down leg to develop here also. Investors are got a lot of things to deal with here in front of it, and I'm not sure any of it is conducive to confidently establishing new ownership in any markets, and commodities included. So I think you got some activities there that are of concern. Technical conditions warn of short-term weakness and vulnerability. Overall conditions suggest that we should be viewing such breaks, if they occur, as longer-term ownership opportunities and expect a seasonal bottom to form here. But I do have concern we're going to go back and revisit last week's lows, possibly violate those lows, but in an overall process that is trying to establish a seasonal bottom here. For the DPP Grain Desk, this has been Duane Lowry.